Hey guys, welcome back to the channel. I just want to give you a very quick update because the Fed just came out with news and here right away it says in CNBC that the Fed will aggressively dial back on its monthly buying the bonds and seeing over 3 hike rates next year. Let's quickly listen to one of the reporters of CNBC.
The Federal Reserve doubled the size of the taper to $30 billion a month. The Federal Reserve adjusted the tape, said that it will adjust the taper further if warranted. It did leave the funds rate unchanged at 0. It said it's prepared to adjust the stance of monetary policy if warranted by the economic outlook. It will maintain 0 rates until maximum employment is achieved. Now, the Fed is no longer using the word transitory, doesn't call inflation transitory, more on that in a second, but I want to show you what it looks for. The median Fed forecast now looks for a 0.9% funds rate in 2022. That's up quite a bit from where it was, and even more aggressive than we saw in our CNBC Fed survey, and for 1.6% for 2023. So call that what you want to call it, 3 or 4 hikes next year, 2 or 3 hikes next year, and another 3 the following year. Fed sees 5.3% inflation this year. That's a rise from its prior forecast, but it does see it coming down in 2022 to 2.6%. The Fed's saying supply-demand imbalances are what are contributing to the elevated inflation level. It sees risks from the new variant to the economic outlook of the virus. The decision was unanimous. Job gains have been solid, it said. The unemployment rate has declined substantially. Now, importantly, and maybe somewhat amusingly, the Fed said it is no longer seeking inflation above 2%. So doubling the taper, but keeping it 0 and saying maintain it until maximum employment is achieved. Kelly?
All right, so the Fed is aggressively dialing back on the monthly buying. It did first 15 billion a month. That was here, and now it's tapering 30 billion a month, which means that soon they will be done with all tapering, and there will be no money printing at all anymore. I think the outlook was then on the first quarter, beginning second quarter, that will be over, and then also rising the interest rates with maybe 3 times next year. Usually they do then 0.25%. Okay, right when the news hit, the price of BTC started to pump. We're coming down now a little bit. This is on the hourly. You can see that we had that bounce. We talked about it earlier, and now we had a rally up of more than 5.5%. We are coming down now a little bit because I think the shorter time frames are pretty much overbought, so it's still 4%. But the real action was actually at ETH. At the minute I uploaded the previous video, then I actually saw that I completely missed this falling wedge right here, which usually is a bullish scenario because we usually break out on the upside. That also happened. So if you took this trade right here at the bounce, man, beautifully done. Congratulations. That was quite the home run then that you make, because that is more than 9%, so well done. This is on the 4 hourly. That is going to close now in just a little bit, so we were close outside of the falling wedge, which is of course bullish news. Don't jump into any longs right away, because also this one is pretty much overbought on the short time frame. So actually what you want to see in a perfect scenario is that this now actually comes back, testing the resistance that now becomes support, and then we are going higher. That actually would be great. If we do it on hourly, good. If we would do this on a 4 hourly candle, that will be even better, because the higher the time frame, the more powerful the chart is. All right, cool. On the shorter time frame, let's zoom in real quick, because that actually looks pretty much overbought. Here the RSI on the hourly is still fine. If we zoom in on the 15 minute, you see that we're reaching a little bit overbought territories. On the 5 minutes, we are already cruising a little bit higher on the overbought situation, a little bit longer. So I would not jump into a long position, just wait a little bit. You could say that on the 5 minute we test the support, but you know, the 5 minute is just not so very powerful. So be careful here. I would not be surprised if we go down a little bit lower. This also means that we have not seen the wick down, because I said earlier we might wick lower and then we go higher. Then we come like this, and then boom, we go higher. That didn't happen. That also didn't happen then, of course, for BTC. There's no wick down now. Doesn't mean it can still come, because this looks a little bit like a sell the news event so far. I do not certainly think that this was then the starting sign for us grinding higher to the new all-time high. It would not have that much of an effect on the crypto market if the Fed starts tapering or not. But it's nice for today. It's nice for if you were in trade or not. So especially on the ETH, that's where the firework is right now. And just be very careful. Do not jump into any long until we maybe get some retest or pullbacks, and then you can go higher. If we're really kind of reversing here in the trend, so that you really see that the chart's doing this, then indeed we might go much lower and retest one of these supports. If it is a bit more wicky, then actually I just hope that we are testing this support and then going higher. That will be great. I'll be waiting for that. I also will not be jumping in any trades. I'm just waiting for the market to come to me before I make a decision. I just wanted to give you again that quick update, guys. So please do me a favor, hit that like button and subscribe, and I'll see you guys in the next one. Thank you so much. Bye bye.